let's start off with a look at data out today, putting the US in the spotlight first. So far, we've had company earnings and economic data supportive, a new flurry of M&A activity as well. We await estimates for GDP, final estimates for GDP today, though. What are your expectations on that front?
Morning, Alishia. Yes, it's a big day for data out in the US. What we're waiting for is final estimates of Q3 GDP. What typically happens is that you have three estimates released. The first estimate came in at 2%, it was later upgraded to 2.5%, and today with the final estimate, markets are expecting a final number of 2.8% quarter on quarter annualized for the third quarter.
Not only the US that we're waiting for numbers on that front to be released by the UK as well. Expectations there?
Yes, Alishia, as far as the UK goes, we're expecting a final estimate of 0.8% quarter on quarter. This should be unchanged from the previous estimate.
Looking at, while that plays out, the kind of happenings that are unfolding in the Eurozone in particular, we've seen the Euro see some reprieve with China pledging to support the Eurozone as a whole, and traders saying that it's as simple as being nice to see that we've got others supportive of the Eurozone region as opposed to just the Eurozone entities themselves.
Yes, absolutely. To date, with all of this debt crisis playing out in Europe, it's really been Eurozone players themselves that have been at the forefront, along with the IMF, in trying to tackle these issues. So it is certainly heartening to see other global players also lending some support. We had the Chinese Vice Premier saying that they would be lending some concrete support to countries at the heart of the crisis, and this has been taken to mean that they would certainly be buying government bonds of countries that have been worst affected by the sovereign debt crisis. It's certainly not surprising coming from China, because the EU is actually their biggest export market. So the slowdown in growth that we're seeing and expecting in that region is certainly going to hit China unless they step in and lend some support to these countries. So certainly heartening to see that.
Well, talking about heartening data, South Africa is also expecting a leading indicators release where it looks at future economic activity in the country, looking at an outlook of 6 to 12 months and where the economy is actually headed. Outlook on that front, Nomvuyo?
Well, Alishia, the data should actually have come out a few minutes ago. That would be the data for October. That's the latest estimate. What we saw in September was a slight uptick in the index after it dipped in August. So certainly we'd all be hoping that the latest data showed a continued improvement. There have been other economic indicators like retail sales and the PMI that have also improved recently. So we'd certainly be hoping to see a similar improvement in the latest data, and that would certainly bode well for growth looking out 12 months ahead.
In the meantime, we've got that rand trading in a pretty tight range. It's holding a firmer bias more than anything else, where we had the unit briefly break resistance of 680 yesterday, which has been tough to break over the past week or so. What are you making of the rand's resilience that we're seeing?
Well, Alishia, the rand's pretty much been stuck in the sort of 675 to 690 range really since September, and we think that although there was that brief rally yesterday, we think that it's going to pretty much stay within this range, especially now with markets being quiet ahead of the holidays. Probably going to stay in that range until early next year. But then we expect to, in line with a comeback in the dollar, we're expecting to see the rand actually drift weaker for much of next year. Largely based on South Africa's fundamentals. In particular, growth is not expected to outperform that of most emerging markets, and also in relation to developed countries isn't likely to show much fireworks, although it will certainly be an improvement on this year.